Hello and welcome to Investing Confidential. It's around 12:30ish Eastern Standard Time. I am watching this Roaring Kitty thing. It's pretty wild. Not the content of it, it's garbage, but the fact that you had almost 450,000 people waiting. Now you've got, I don't know, something like 600,000 plus people on the stream. By the time this guy's done, it'll probably be a million. It's just crazy. And I've never seen anything like it. As you guys know, I've been on Wall Street a long time and an investor a long time. I've never seen anything like this. I'm going to talk a little bit about it, but first, I want to mention one thing that I think those few of you, because not that many, that have been listening to my videos know my opinion on what's been going on in real estate and how the real estate market has been propagandized by Wall Street and large funds, and it's a complete bubble. All right. So how do you create a bubble? Well, you take supply out of the market, you create artificial FOMO, and then you get a bubble and then it collapses. Okay. So the collapse has begun, folks. I'll tell you right now. Um, here's again, this is today Wall Street Journal about essentially what's happening. You read all about all these, development companies and investors putting money in rentals. Okay. You know, they want us to be Russian serfs. They want us to rent. They don't want to own. They want to destroy the American dream. They want you to be literally rental slaves. Okay, so there's tons of money going into rentals supposedly, but the bottom line is the real estate market is collapsing, folks. Not only just on the commercial side, but you've got people that jumped into this frenzy, right? Individuals like yourselves, right? They try to jump into it late in the game, 2022, 23, 21, 22, 23. And as you can see here, they're getting pummeled. They're getting wiped out because the article talks about interest rates, because you can blame interest rates. That's one part. But the bottom line is there's vacancies. If these apartments were fully rented, okay, the occupancy was 100%, there'd be no issues. There'd be no issues, but they're not. There's too many rentals. Way too many people have bought houses and tried to rent them out. And there's not enough people to rent. And it's a collapse. It's a disaster. It's collapsing. Multifamily home rentals, that business as an investment has collapsed. People are getting wiped out, as this article rightly points out. So this is the beginning. We haven't even, we're in warm-ups in the commercial real estate industry because most companies are still paying they're negotiating, they're still paying leases. But as every lease comes up, 0% of the leasees will lease at the same terms or will even lease at all. 0%. Not 90, not 0%. Do not listen to the real estate companies, Wall Street. They will lie to you. We are on the precipice of a disaster like we had in 2008, 2009, but it's a different type of disaster. Okay, those foolish people, unfortunately, that jumped on this wagon train as investors late in the game, they're going to get hurt. But the real people are going to get hurt in the real estate market, and then in this multifamily investor collapse is going to be banks and hedge funds. That's just going down. Okay. All right. I'm going to address all things about Wall Street today, but let me address this Roaring Kitty. It is amazing. I took this screenshot, but obviously, as I mentioned, there was almost 400 plus 50,000 people waiting for this guy, Roaring Kitty. And then when he finally came on again, just a few minutes ago, as you can see, I mean, the guy's now at 650,000 and it's going higher. I don't know what he's saying. I have no idea what this guy's saying. I don't really care because that's not the essence. That's not what really matters here. What matters here is there's a transition going on. Wall Street no longer is the power. This transition has been happening for some time. Wall Street has tried to hold the tide, right? They've tried to steer you into ETFs, which I'm going to show you later. They've tried to steer you in wealth management products. But that game is over because people are realizing it's just about fees. They just want to squeeze you for as many fees as possible. They don't want you buying GameStop. They don't want you buying AMC. They're going to do everything they can and it's not about AMC. It's about individual stocks. It's about the stock market was invented for people to create wealth by buying good companies. Wall Street does not want that. They don't want that because there's no money in it for them. They want to rig the game. They want you to buy funds. They want you to do wrap accounts. They want you to do everything that you shouldn't be doing. And they don't want you to watch this roaring kitty. So roaring kitty phenomena is not about GameStop. It's not about him. It's about a transition that is happening today from the power going from Wall Street to Main Street. And I see that happening. Okay, next one, folks. I mean, this happened. The job numbers came out today. I'm not going to dwell on it, but as I told you before, these numbers are fake. And now we're seeing finally, writers, financial writers, that something that we saw over a year ago, showing how this Bureau of Labor Statistics, BLS, data is fake. Every time they report something, there's a revision, previous revision, previous revision, previous revision. What they report initially is garbage. You have to wait through the revisions. So what the data has been telling us is, as we spoke about, there's jobs, which are temporary, and then there's employment. Employment has been down for a long time. Full-time jobs, employment is negative. It's part-time jobs that are going up. It's people, unfortunately, this is not a political statement, but there are migrants coming into this country. They'll take any job. And when they take a job, the government clicks it. So analysts are finally realizing that the job market is not strong. It never was strong, by the way. The layoffs in tech industry are just absolutely ridiculous. Companies are blowing up left and right. But again, I don't want to get into that right now. So again, job openings, these numbers were fake. These numbers come from Indeed and all these other services that you could just post. I could post 100,000 jobs tomorrow that my company, and they'll put it in there. You don't have to hire anybody. So these are all fake. This is going back down to pre-pandemic levels. Everything is going back down to as I said before, I'm not going to make that pronouncement about the stock market, but I think it is going to go back down to pre-pandemic levels at some point. Okay. So, there was a lot of anticipation of these job reports, as you could see. They want a slowdown. The Wall Street and the government, well, not the government per se, but Wall Street wants a slowdown. They want, because they think that once there's a slowdown, the rate cuts are going to start. Now, today I've heard all these people, oh no, rate cut in July is coming now. Now it's coming. We're in a slowdown. The Fed has to cut rates. And then the last couple of days, no one's paying attention, but you are, because you know that gasoline prices have been rising pretty good the last few days, and they're going to continue to rise. So as you can see here, JP Morgan, Citibank, holding on for July rate cut, and Fed will probably cut because this is an election year. Okay, the party in power is losing, and they need a boost. They need a boost. No one's going to buy it, but they need a boost. But in the middle of this, the article here in the middle here, Michael Hartnett from Bank of America. I know him personally. He's a great guy. He's a very, very smart dude. He's not going to play the game. He knows that this economy, the real economy, not the elite economy, but the economy that affects 90% of the people in this country, is in recession. Plain and simple. The numbers could say what they say. They're all fake. The real economy is in recession. And a Fed cut will be trouble because it'll be a policy mistake, which is going to create a lot of problems for this country. So As we said before, the job numbers came in. Okay. They disappointed a lot of these people because they were stronger than expected. Because the White House wants one thing and Wall Street wants another thing. White House wants to show good. White House cannot afford to show the economy is weakening because we are in an election year. So the BLS, the Fed, they're going to play the game with the White House. And Wall Street, on the other hand, wants a rate cut. They don't want to see these strong numbers. They want the economy weak, so they get a rate cut so they can do more IPOs and shove it down your throat. But Wall Street's losing, folks. It's losing badly. Okay? Evidence, if you don't read the columns below the headlines, you're not going to see this. But Wall Street's got big problems because the allocators of capital, the big money, the pensions, etc., are starting to realize that these guys on Wall Street, they're just clowns. They're just intermediaries. That as technology comes more and more, they don't need them anymore. They don't need them anymore. And it's the beginning of the end. The absolute beginning of the end of what we knew as the old Wall Street. But last couple of weeks, you had ECB cutting rates this week. Okay. That's interesting because the ECB probably need to cut rates because some of their economy, including Germany, were in recession, real recession. The numbers showed it. They had to cut. Then you've got Aramco here. Again, Wall Street loves this $12 billion stock sale, but guess what? You're not going to be much fees in that. That's going to be done in Saudi, but there's big demand for this. Okay. And then you've got, the Wall Street private equity buddies. They got problems because there's a lot of little direct lenders out there that are taking market share. So Wall Street overall is under attack. All their business is under attack. They're not going to be able to be what they used to be. Okay. They're just not going to be. And that's a big problem for them. And they're going to fight like hell to keep it. And look, at the end of the day, Wall Street has put all its bets on one stock, NVIDIA. One stock. Okay, you could throw Apple in there, you could throw Microsoft, but everything is about NVIDIA. Everything is about AI. That's all you're hearing. AI, 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 AI. Okay, I believe in AI, 100%. I use AI. But AI is not worth $50 trillion or whatever the hell that they think it's going to be worth. And as you can see here, if you gave me a choice between every company in China, literally the economy of China, and NVIDIA, Apple, and Microsoft, I would take every company in China. Oh, baby, would I take that. And that's what you're seeing here. The frenzy, the absolute frenzy of these stocks and the breadth and the concentration at 40-year highs. It's not, it cannot last. But no, you can't pick the top, but it cannot last. Okay. Let's go back to Wall Street a second. Again, another sign of a top, CLOs. This is the stuff that was toxic in 2007 and 8. Collateralized loan obligations. This was toxic. But guess what? Wall Street has, because of rates, whatever, they've gotten people to put record numbers of money back into these CLOs from almost nothing to 12 billion. It's all wealth management money, folks. It's you piling into these speculative instruments that are invested in multifamily housing, used cars, which are going also down. Direct lending loans. They're going out to these old little direct lenders. I showed you they're competing against private equity funds. And why? Because you can lend to anybody and take that risk, give it to the CLO, collect the fee. So there's direct lenders everywhere lending to any kind of small businesses, non-secured, 200,000, 500,000, $1 million loans. Boom, get it to the CLO. A large percentage of loans are going to go under. These CLOs will all collapse. But now it's a great, and this is again a Wall Street fueled speculative bubble. And as I mentioned about ETF, this has been going on for a while, but you could see the acceleration. 12 trillion AUM just in ETFs, and you include funds even more. They do not want you to buy stocks. They do not want you to buy stocks. They're afraid if you buy a stock, you'll sue them. You lose money, you'll sue them. Maybe you will, maybe you won't. I don't know. But traditional Wall Street wants you only to be in a fund. That's not good. And finally, news came out this week. This is the beginning of the end for the established financial players. You've got the two of the biggest buy side, meaning asset managers in the world, BlackRock and Citadel. Citadel also controls most of the trading done. They're forming their own stock exchange. And I saw a lot of articles, it's not going to work. It's like, trust me. Think about this. Today, if you give an order to Charles Schwab, Morgan Stanley, anybody, Robinhood, doesn't matter who it is, that order, there's 100% chance, 100% chance that order will be routed electronically. And that order will be executed on the New York Stock Exchange, off the stock exchange, doesn't matter, because computers, unlike people, don't care about their buddies, right? So if you in the past, you gave an order to a guy, broker, he executed with his buddy, they paid commission, great. There's no commissions anymore, it's zero. So this is why computers are in charge. They don't care. So if I'm a company and I list on the Texas Stock Exchange or the Dubai Stock Exchange, doesn't matter anymore, because if it's a stock that everyone wants to buy, they're going to put it in a machine, and that machine will find the liquidity no matter where it is. Could be in New York, could be Texas, could be Miami. It doesn't matter anymore. The moats are collapsing around the legacy players. The stock exchanges who don't adapt are dead. Who only kowtow to the brokers will be dead. And the brokers themselves, the banks, capital markets. This is a long-term theme. I just wanted to throw it out there. If you haven't seen the news, this is the beginning of the end of legacy Wall Street. I think it's already collapsed, but this to me is very interesting. So going back, Roaring Kitty, still going on. Good luck to you if you're in GameStop. I wouldn't bother with it. But to me, it shows the movement, the transition from old Wall Street to Main Street, which I think is positive. Collapse in real estate is positive because it's owned by the guys who bought in are the guys you want to see lose money. The people who are going to benefit are people who are renting now because they just can't afford these houses, these massive prices, and prices will come in. They're starting to come in now. So all investors, it's rough out there. Be careful out there, but also there is positive news on the horizon, and the sun will come out tomorrow. Have a great weekend.